Hello everybody, it's me the Boss Hog. I'm trying to do these weekly reviews every week, that makes sense, but due to life getting in the way, primarily a new job, you get 2 for 1 this week. So let's see the stocks I'm buying, stocks I'm selling, and the dividends I'm getting. Okay, so normally in my top table here I'd show last week and month to date, but seeing as last week was August to date and I didn't do one for the last week of July, it seemed like a nice way of doing this. So there's my July figures there. Unfortunately showing a small loss. It is what it is, my first loss since I started investing, and I kind of talk about the psychology of that in my portfolio review that I did yesterday. So if you're interested in more details there, feel free, but I won't labour the point here. In terms of the month to date, it's definitely started more promising. Friday especially was really a good day, the best day I've had it for quite a while, so that made me feel quite good, especially actually because the strong performers were stuff that I'd been averaging down into and felt like I had more faith in than maybe the rest of the market did, so that felt really great and helped with that mental challenge of last month actually, so that was great. Continuing to add £160 a day into these investment portfolios, one for my wife and one for myself. We had been adding a little bit more aggressively just because we had some money saved and I got a bonus in July as well, so that's why that number there is a bit bigger. A lot bigger actually, but yeah, the plan now until at least January, when my wife gets her bonus potentially, is just to continue adding at that level, so that's fine. And yeah, divvy wise, last month finished relatively modest at 145. This month I'm kind of hoping I might hit 200. It's going to be a bit close. I do monitor it, but the reason why I'm not sure is because my biggest one is EPD, but I have to rely on the dollar conversion rate to see where it actually sits. It's going to be super close either way, so that's kind of weirdly exciting. You can see here, by the way, both all my tables have a last week and the week before as well, just to show you how that breaks down there as well. But any questions, let me know. But yeah, that's the high-level summary. So now let's have a look at the stocks I've been buying and the stocks I've been selling. Alright, so shares I bought here, table on the left. The reason for any yellow is just because these are the things I really want to talk about, but if anyone has any questions about anything that's not yellow, feel free to ask. This table is ordered highest to lowest of where I spent my money last month, basically. So just to talk through the yellow highlights then. So Amazon, Huntsman, Intertek is a UK like quality assurance company, and Evraz, which is a UK listed iron ore mining company. I added them after the results. Amazon, I think, got beaten up, but arguably it was a bit ahead of itself. The market especially has quite crazy analyst ranges, in my opinion. But anyway, for me, I have a great buy-in average for Amazon, and I took the opportunity to add some more. Huntsman here, I mean, I read their results. It is quite a difficult company to get your head around because they do advanced chemistry, but I really like them, and I think everybody is sleeping on them. I haven't seen them spoken about anywhere on YouTube, and I hardly see them mentioned at all in anything. So whatever, I'm buying. I mean, the results were solid. The only, well, two negatives. One of them, they're starting to see some inflationary pressures, but they were quite relaxed about it. And one of the more positive company earnings reports I'd heard regarding their ability to pass through inflation rises. So that felt really great to hear that from a company. And the other thing as well, their automotive products were down 10%. This was a result of reduced demand because, you know, auto manufacturers are down because they can't keep up with production because of semiconductors, so it's like Ripple. But broadly speaking, the company's moving in exactly the right way, so they've become a really big holding of mine. I really like the company. 3% yield as well, it's no joke. And I mean, I think I think it's at least 20% undervalued now. I have a $32 average price, target price for Huntsman, and I'd point out I'm at the very pessimistic end of analyst ranges there as well. So obviously do your own DD. But I really like them. Intertek, I actually think Intertek is a very fine company. Basically, they published their results. They were robust and solid. Market wasn't as impressed. To be fair, it is a fairly expensive stock. But it's a very fine company. I think it has a wide moat. It's difficult because it kind of relies on reputation to kind of give its quality assurance and for people to pay for it. So for me, when the share price went down, it just seemed like a good entry point, basically. So I opened up a reasonably small position, but still about 0.8% of my portfolio. And Evraz here, like, I actually prefer Evraz to Rio. I do appreciate if you're an American investor, you don't have an ADR in Evraz, but you do in Rio, so fine. But Evraz yields better. It doesn't rely on specials, so it's a lot more predictable. Yeah, okay, it's a lot more iron ore focused, but Rio is actually 2/3 iron ore, so you might as well just call it an iron ore play. It's not like, it's not, although it spends a lot of money exploring for copper. It hasn't really got that up and running yet. And yeah, okay, it's got a few other interesting parts of it, but like Rio seems to be in the news far too much for negative stories, right? Quite poor negative stories, as well as just feeling like less reliable. And also Everage yields slightly better. It's one of the, I think it's the highest paying yielding company of the FTSE 100 for the last 5 years. Regularly has sort of low double digits yields. And it's great. I mean, it's 12% across the last year and doesn't rely on specials to do that. So that feels really good. And anyway, the market just didn't bother reacting at all when they doubled their profits, from 1 to 2 billion. I do appreciate that some people believe like iron ore is in some super cycle and it's going to crash and all the rest of it, right? And clearly, Everaz has benefited from expensive iron ore spot price, but still, I think there's enough to like about the company to buy. So that was why I did buy it. Genie, again, I've spoken about this a lot more in my monthly video, but basically, Genie was probably running slightly ahead of itself. I'm not too good or confident about pricing such a young company, but I feel like the target price here is like low 20s somewhere. And okay, the rights issue was $19. Okay, that's fine. But then the market just reacted super badly to this, and like the share price went down to like $15, and that just seemed like too good an opportunity to miss out on. And I mean, I was selling shares to try and buy it, right? And so I did. This is admittedly a high risk. It's one of my two highest risk companies that I own, but I just feel like there's enough risk and reward at these kind of prices to justify. And again, to me, this is like comfortably now a 20% opportunity, so that's why I bought. Poly, this is a UK listed gold and silver miner. It's basically my hedge. It also yields at like 7.4% or something, so that also helps and it's lovely at this kind of price point. Anything under 15.50 for me is just one of the easiest decisions I've ever had to make. And my plan here is to have a 5% holding in gold and silver, so it just builds toward that, which is great. Aviva here, Aviva has had issues in the past. It's kind of a fairly unwieldy business, sorry. But about 18 months ago, it got a new CEO. She seems to be doing a great job, and their results are in the middle of August, and I'm pretty sure they're going to have great results. Legal in General, which is another similar sized holding, they published their results first week of August, and they were pretty fantastic. And I just think the UK has some great insurers, so I've been buying. EPD, this is obviously the American Enterprise Pipelines. It's 8.4% yield. I do appreciate it's a MLP, so for Americans, you've got a dodgy tax form to fill out. I don't, and also I get to keep 100% of the dividend from EPD. I don't have to pay a 15% tax on it like I do with most American shares, because EPD is an MLP. So for me, it's just a very simple dividend stock to be buying. And a very safe, basically well-run company, in my opinion. So great, 8.5% yield for not doing very much, and I'm hopeful for some modest capital growth as well. So that will be fantastic. And LMT and J&J here. My strategy, as I've touched on beforehand, is basically so I've got two investment accounts, and all of the dividends I receive in one account go toward Lockheed Martin, and all of them I receive in the other one go toward Johnson & Johnson. My psychological approach here is that in 20 years' time, when I'm sure these companies will both be about, I'll have material stakes in both of them, and I would have never have had to have paid a penny of my own money. So that would just make me feel really warm and fuzzy whenever the dividends are paid. That's the rationale there. Okay, and let's move on to some sales. All right, so similar logic with the yellow highlights here, although most of them are yellow. But again, if anyone's interested in Danaher or Games Workshop, feel free. Really, though, my rationale for selling most of these is to free up some funds for other dips. So Pets at Home, this is, so not PetsMed, this is the UK listed Pets, so Pets at Home. Centamin is a UK listed gold miner. Antofagasta is a UK listed primarily copper miner. And then Cyrus One is Cone, the data center REIT. So to free up some money for the companies I've already mentioned. I would also mention, actually, with Pets at Home specifically, I actually sold out of this almost perfectly just before their earnings. For me, it's a very expensive stock, and don't get me wrong, it's a really nice business and it's done really great during COVID. And I think their bricks and clicks kind of integration is really slick. Like it's a very, and I have a pet, so I like going there. It's a really good store, but only good news was priced in. I sold out at like 490 something. It went up to about 502. Then they published results which could never keep up with the multiple it was trading on, and sure enough, it then crashed to like 460. I think anything under 450 for this company is probably reasonable, but I really want to get back in at 420, so that's my target. And this was one of my more successful timing moments last month, so that felt pretty good. But yeah, it was also very handy because I used it to invest in, I think it was Huntsman and Genie, so that was handy as well. So everything else there is listed. In the other portfolio, I swung traded actually Energy Transfer super well. I got in at like just over $9, sold out at sort of $10. I don't even remember. It was just a very easy £100 to make, so that felt great. And Tellus also, I've been using Tellus as like a store of capital basically. I think the share price is about right. But I think it's a nice company, so I just like enjoying the dividends and putting it aside when an opportunity opened up, which it did. For companies I've already mentioned, so I'm not going to spend more time on it. Yeah, I would say in general I have no regrets about selling any of these at all. I would get it back into most of them. Actually, I did open up a very tiny position. I'm talking like £5 in Sentiment literally just this week. So although I closed my position to buy some Amazon shares, I am back into Sentiment. I prefer Poly. It's like a safer play, but Sentiment has potentially higher risk and higher reward. Yeah, and to be fair, I mean, I have price points to re-enter into all of these. I'd also timed Anto quite well. It had kind of run up and then went down, and I caught it at like 14.20, sold back out at 15.20. So again, I sold all of these at like sort of 5 to 20% profit on very short time periods on the whole. So that felt fine, and then I was using those profits to average down into companies that I believe in for the long term. So no regrets on my sales actually. And to be honest with you, because this week is slightly odd because it's consolidating 2 weeks, I haven't got any graphs next, which is why I've spoken for longer than I normally would on the buys and sells, just to give you a bit more insight into the way my brain at least tries to work. And yeah, that was the approach that I've been taking for the last 2 weeks in terms of what I've bought and sold. Any questions at all, please put them in the comments. Otherwise, though, thank you very much for joining me. I've been the Boss Hog, and enjoy the rest of your day. Bye for now.